Now, the mathematics of independence deserve direct examination. The first $100,000 is brutal to accumulate, but you've got to do it anyway. I don't care what sacrifices it requires. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on $100,000. After that, you can ease off the gas a little bit and let momentum help you. Why does this number matter so much? Compounding is the answer. Most people don't understand compounding at all. They've heard of it and they can define it on a test, but they don't feel it in their bones. If they did, they would behave completely differently with every dollar that passes through their hands. Here's the mental model that makes it real. When I saved $10, I knew I was really saving $100 or $1,000 because it just took a little wait for the math to work. That $10 invested wisely over decades becomes something much larger through forces that work while you sleep. That's not magic. That's arithmetic anyone can verify. The key insight is this: compounding needs fuel to work. Nothing to compound means nothing gained, and a little to compound means a little more. But if you can accumulate a meaningful sum, say $100,000, and let it compound uninterrupted, you've planted a money tree that will keep growing whether you pay attention to it or not. The first rule of compounding is simple: never interrupt it unnecessarily. This is where most people destroy themselves. They accumulate a little, then they spend it. They accumulate again, then they spend again. Every interruption destroys years of potential growth, and they're constantly starting over from nearly nothing. Think about it mathematically, and the pattern becomes clear. Saving and investing consistently reveals that the first $100,000 takes the longest to accumulate. The second $100,000 comes faster because more capital is working for you now. The third $100,000 comes faster still. By the time you're building your fourth or fifth $100,000, it barely requires any additional savings because your existing capital is doing most of the work. This is how wealth actually gets built, not through income, but through assets that compound year after year. Understanding both the power of compound interest and the difficulty of getting it started is the heart and soul of understanding a lot of things about life and money. Here's the uncomfortable truth that nobody in traditional career counseling will ever tell you directly. Employment is designed to extract maximum value from you while paying you minimum compensation. This isn't evil, and it's not a conspiracy. It's just business operating according to its nature. Your employer needs to pay you less than you produce, or they make no profit from employing you at all. The difference between what you produce and what you're paid is their margin. And every employer, from the most ethical to the most exploitative, operates on this exact principle. When you work for someone else, you are, by mathematical necessity, leaving money on the table. That money goes to the owner, which is why being an owner matters so much. Now, this isn't a reason never to work for anyone, because excellent reasons to be employed exist. You learn skills, you build networks, you gain experience, you receive steady income while you figure things out about yourself and the world. But you should never confuse employment with wealth building, because they're not the same activity at all. Employment builds your human capital. Ownership builds your financial capital. Doing only the first means you'll end your career with skills nobody wants to buy and savings that won't cover a decade of retirement. This is why I keep saying the problem isn't jobs. The problem is stopping at jobs. The problem is assuming that if you work hard enough and long enough, you'll somehow end up wealthy, because you won't. The arithmetic simply doesn't work that way. You need ownership. What ownership actually means deserves careful examination. Most people hear ownership and immediately think of starting a business. That's one form, but it's not the only form. And for most people, it's not even the best form available to them. The number one idea is to view a stock as an ownership of the business and to judge the staying quality of the business in terms of its competitive advantage. When you buy shares in a good business, you become a part owner of that business. You participate in its profits and you benefit from its growth. You're not trading time for money anymore because you're owning a piece of something that works whether you show up or not. This relationship differs fundamentally from employment. When you're employed, you trade hours for dollars at a fixed rate with a ceiling on what you can earn. When you're an owner, you participate in the upside with no ceiling at all. The business can grow 10 times larger, and your ownership grows right alongside it. Try getting that deal from your employer and see what they say. The problem is that most people treat stocks like lottery tickets. They buy things they don't understand, hoping for quick gains, panicking when prices drop, selling at exactly the wrong time. This isn't investing in any meaningful sense. This is gambling with extra steps and worse odds. Real ownership requires a different mentality entirely. You have to think like a business owner, not a stock trader. You have to evaluate competitive advantages, management quality, and long-term prospects before committing capital. You have to be willing to sit still for years, even decades, while your ownership compounds without interference. There are huge advantages for an individual to get into a position where you make a few great investments and just sit on your ass doing nothing. You pay less to brokers. You listen to less nonsense from people with something to sell. And if it works, the governmental tax system gives you an extra 1, 2, or 3 percentage points per annum compounded that active traders never see. That last part matters more than most people realize. Every time you sell an investment and pay taxes on the gain, you're interrupting the compounding that creates real wealth. Do this frequently, and you destroy most of your potential returns. Do it rarely, and the tax-deferred growth becomes enormous over time. The patient investor has structural advantages that the impatient investor cannot access, no matter how smart they are. Patience isn't just a virtue in investing, it's a mathematical edge that compounds along with your money. Some of you listening to this are thinking that you don't have any aptitude for investing, that you don't understand businesses, that you'll never be able to do what I'm describing. Maybe that's true, but probably not. Here's what observation has shown me about aptitude. Most people never discover theirs because they never seriously look for it in the first place. You have to figure out what your own aptitudes are, because if you play games where other people have the aptitudes and you don't, you're going to lose. And that's as close to certain as any prediction you can make about human affairs. You'll do better if you have passion for something in which you have aptitude, and this combination matters more than either quality alone. If Warren Buffett had gone into ballet, no one would have heard of him despite all his intelligence. That's an extreme example, but it illustrates the point perfectly. Talent misdirected is talent wasted, and most people waste theirs without ever realizing what they're giving up. The question then becomes, how do you find your aptitude? The answer isn't complicated, but it requires honesty that most people find uncomfortable. What do you find yourself doing when you're not required to do anything at all? What subjects capture your attention without effort or external pressure? What activities make time disappear while you're doing them? Where do you produce results that surprise you with their quality? These questions point toward clues about your nature. Most people ignore them because they're too busy following the conventional path, the path that leads to jobs they don't like, doing work they don't care about for people they don't respect. When you go out in the world, look for the work you would do if you didn't need the money. Don't postpone that sort of thing because you really want to think about what will make you feel good when you get older about your life and how you spend it. This isn't idealistic nonsense meant to make you feel better. It's practical wisdom that compounds over a career. Work you love creates energy that sustains you through difficulties. Work you hate drains that energy day after day. Over a 40-year career, that difference compounds into an enormous gulf between people who end up fulfilled and people who end up bitter. People rise in life all the time who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than when they got up, and boy, does that help, particularly when you have a long run ahead of you. This is perhaps the biggest edge available to ordinary people, and almost no one takes advantage of it, which makes it even more valuable for those who do. Consider two people starting their careers at age 30 with similar abilities and opportunities. Person A stops learning the moment they master their job, becoming competent and staying competent, essentially remaining the same person with the same knowledge over 30 years. Person B commits to learning something new every day. Not revolutionary insights, but steady, incremental improvements in understanding that accumulate over time. After 30 years, person B has compounded their knowledge the way smart investors compound their money, and the gap between them has grown enormous. Who ends up more valuable, more adaptable, more capable of recognizing opportunity when it appears? The learning machine always wins over the long term, not because they're smarter to start with, but because they're smarter at the end. The beautiful thing about learning is that it compounds just like money, but there's no tax on it. No one takes a percentage of your improved understanding, and no one charges fees on your accumulated wisdom. It's one of the few assets in life that only grows and never depletes with use. But it requires discipline that most people lack. It requires reading when you could be watching television, thinking when you could be mindlessly scrolling, admitting what you don't know, which most people find impossibly painful to their ego. The people who can't do this, the ones who stop learning the moment school ends, are guaranteeing themselves a life of gradually increasing irrelevance. Their skills become outdated within years. Their knowledge becomes stale. Their value to any organization, including the organization of their own life, slowly declines toward zero. This is not an exaggeration for dramatic effect. I've watched it happen hundreds of times to people who had every advantage, except the discipline to keep learning. Now, something nobody wants to discuss deserves attention: work ethic and what it actually means. Another thing you have to have is a lot of assiduity. I like that word because to me it means sit down on your ass until you do it, whatever it is that needs doing. This sounds simple, but it's not simple at all. Most people have a remarkable ability to convince themselves they're working hard when they're actually doing nothing of consequence. They're busy all the time, they're stressed constantly, they're exhausted by Friday. But productive? Not particularly when you examine what they've actually accomplished. Real work, the kind that builds wealth and creates value, requires sustained concentration on difficult problems over long periods. It requires doing the thing you're avoiding instead of finding clever ways around it. It requires sitting with discomfort rather than fleeing to distraction every time things get hard. Here's an example that stuck with me for decades. Two partners I knew had the following rule. Whenever we're behind in our commitments to other people, we will both work 14 hours a day until we're caught up. No exceptions, no excuses. That firm didn't fail. Those people died rich. This is the standard almost no one holds themselves to, which is exactly why it works so well for those who do. Most people work reasonable hours, take their evenings and weekends, and wonder why they're not getting ahead. What they don't see is that they're competing against people who work 14 hours a day when necessary. That's not a fair fight, and it's not supposed to be. I'm not saying you need to work 14 hours a day forever because that's not sustainable or desirable. What I am saying is you need to be willing to do it when required. You need to be the person who finishes what they start, who honors their commitments, who does what they said they would do, regardless of how inconvenient it becomes. If you're unreliable, it doesn't matter what your other virtues are because you're going to crater immediately. Doing what you have faithfully engaged to do should be an automatic part of your conduct, not something you negotiate with yourself about. You want to avoid sloth and unreliability above almost everything else. This is such basic advice that it feels insulting to mention, yet most people fail here constantly. They're late, they're sloppy, they promise things they don't deliver. They wonder why nobody trusts them with important work or real responsibility. Reliability is the foundation everything else is built on. Without it, no amount of intelligence or talent matters because no one will give you the chance to use them. On elite college campuses, I've often made myself unpopular, pushing this reliability theme. Here's what I tell the students who think they're too good for basic work. McDonald's is one of our most admirable institutions. Signs of shock appear on surrounding faces every time, and then I explain what I mean. McDonald's, providing first jobs to millions of teenagers over the years, many of them troubled, has successfully taught most of them the one lesson they most need: to show up reliably for responsible work. That's the whole lesson. Show up. Do what you're supposed to do. Be where you're supposed to be when you're supposed to be there. Nothing more complicated than that. This sounds laughably simple to anyone who hasn't tried to hire people and build something. But if you've ever tried to build an organization of any kind, You know that reliable people are rare, shockingly rare, worth whatever premium you have to pay for them. Most people have elaborate excuses for why they couldn't do what they committed to do. The people who just do it every time without drama or explanation needed are worth their weight in gold. If you're young and hearing this, or if you have children, understand what entry-level jobs are actually for. They're not for making money, because the money at that stage is irrelevant to your long-term trajectory. They're for building the habit of reliability. They're for proving to yourself and to others that you can be counted on when it matters. Once you have that foundation, everything else becomes possible. Without it, nothing is. Something that doesn't get discussed in most success literature deserves attention. Bad things will happen to you, guaranteed, no exceptions. Life will have terrible blows, horrible blows, unfair blows. It doesn't matter how careful you are or how well you plan. Some people recover from these blows and others don't. And the difference often comes down to attitude rather than circumstance. The attitude of Epictetus is the best one I've found for dealing with misfortune. He thought that every mischance in life was an opportunity to behave well, that every mischance was an opportunity to learn something valuable. Your duty was not to be submerged in self-pity, but to utilize the terrible blow in a constructive fashion that made you stronger. This is not positive thinking nonsense designed to make you feel better temporarily. This is practical psychology that actually works over time. Bad things are going to happen regardless of your attitude about them, and the only question is whether you emerge from them stronger or weaker than before. Self-pity is the most destructive of emotions because it accomplishes nothing and changes nothing. It merely ensures that you suffer twice, once from the event itself and again from your reaction to it, which can last much longer than the original problem. The constructive response to adversity is to ask yourself specific questions. What can I learn from this that I couldn't learn any other way? How can I make sure it doesn't happen again? What opportunity might this create that wouldn't exist otherwise? These questions sound cold when things are terrible, but they're the questions that move you forward. Wallowing in how unfair it all is moves you nowhere at all. My advice for coping with the inevitable difficulties of life is simple and maybe a little surprising. Have low expectations about how easy things will be. Have a sense of humor about absurdity. Surround yourself with the love of friends and family who actually care about your well-being. Low expectations might sound pessimistic, but it's actually liberating once you try it. If you expect life to be difficult and unfair, you're not surprised when it is. You're prepared, and when good things happen, they feel like bonuses rather than entitlements you deserved but didn't get. The people who struggle most with adversity are those who expected everything to be easy. Their expectations betray them at exactly the wrong moment. A thinking tool that will serve you for the rest of your life deserves explanation here. Most people ask, how do I succeed? And this turns out to be the wrong question entirely. The better question is, how do I fail? And then don't do those things. Think about it carefully, and the logic becomes obvious. Success has countless paths, many of them unpredictable and impossible to plan for. Failure has common patterns that repeat across every field and every era. If you simply avoid the common patterns of failure, success becomes much more likely without requiring genius or luck. What are the patterns that destroy people? Unreliability, impatience, excessive spending, working with people you don't trust, selling things you don't believe in, interrupting your compounding, ignoring your aptitudes, stopping your learning, succumbing to self-pity, expecting everything to be easy. Avoid these reliably, and you've eliminated most of what destroys people. What remains is a life that works reasonably well, even if nothing spectacular happens. This approach is much easier than trying to be brilliant, because brilliance is rare and unreliable, even when you have it. Avoiding stupidity is achievable by almost everyone with some discipline. The returns to avoiding stupidity are more consistent than the returns to seeking brilliance. It is remarkable how much long-term advantage people have gotten by trying to be consistently not stupid, instead of trying to be very intelligent. This isn't false modesty designed to seem humble. This is accurate description of how success actually works over long periods. Most of my success came from avoiding obvious mistakes, not from making spectacular moves that looked brilliant at the time. The spectacular moves get the headlines and the admiration. The boring avoidance of disaster builds the wealth that lasts. Now everything comes back to where we started, and the meaning should be clearer. Getting a job is for losers, but only in a specific sense that most people misunderstand. If getting a job is your whole strategy, if you expect employment alone to deliver financial independence, if you never build ownership while you're employed, then yes, you've already lost. You just don't know it yet, and the realization will come too late to fix. But getting a job as part of a larger strategy, that's different entirely. Learning skills, building networks, accumulating capital for ownership, working under people you admire while you figure out your aptitudes, that's not losing. That's intelligent use of employment for what it's actually good for. The point of getting rich is not consumption, and it's not status. It's not impressing people you don't like with money you don't have, which is what most people seem to think wealth is for. The point is independence. When you're independent, you can say no to things that aren't right for you. You can walk away from bad deals without desperation forcing your hand. You can choose your work based on interest rather than financial necessity. You can spend time with people you actually like instead of people you have to tolerate. You can think clearly because you're not terrified of what happens if you lose your job. Consider Benjamin Franklin and why his contributions were possible. He was able to make the contributions he did because he had freedom. The freedom came from financial independence. The financial independence came from building ownership, not from working for others for a wage. If you've got anything you really want to do with your life, don't wait until you're 93. That's not just advice about mortality, though it is certainly that. It's advice about dependency and what it costs you. Every year it continues. Every year you remain financially dependent is a year you can't fully pursue what matters to you. Every year you defer ownership is a year you're falling behind in the compounding race while others pull ahead. The mathematics are unforgiving on this point. Start late, and you need miraculous returns to catch up. Start early, and ordinary returns will make you wealthy through nothing more than patience and time. Here's what all of this means in practical terms. Employment and wealth building are different activities, so do both, but never confuse one for the other. Get your first $100,000 as fast as you can, sacrificing whatever isn't essential until you have it, then let it compound without interference. Become a learning machine who goes to bed every night a little wiser than you woke up. And do this for decades without stopping. Be reliable because showing up and doing what you say you'll do puts you ahead of most people without any other advantages needed. Avoid working under people you don't respect, maneuvering cleverly until you're surrounded by people worth emulating. Think like an owner, not an employee, because when you invest, you're buying businesses, and you should act like it. Never interrupt your compounding unnecessarily because patience is not just a virtue, but a mathematical advantage that compounds along with your money. And remember what independence is actually for. It's not for hoarding, and it's not for status that impresses strangers. It's for freedom, the freedom to do work that matters, with people you respect on terms you choose. That's not something you get by being an employee forever. That's something you build by thinking like an owner from the beginning, even while you're working for someone else. The people who figure this out early live different lives than the people who figure it out late or never figure it out at all. The mathematics guarantee that difference, and no amount of hard work in the wrong direction can overcome arithmetic. Now you understand what most people never will. The question is whether you'll act on it.